Hello again, and welcome to the 365 Retirement Podcast with Sam Liang of Rubino and Liang Wealth Partners. My name is Randy Cook. We're here each week to talk a little bit about the subject of retirement and talk about your financial needs and talk about financial news and what you see out there sometimes because, boy, it can make a lot of questions in your life. Sam, how are you doing today?
Doing fantastic, and always great to be in studio talking about exactly what you just said, retirement, right?
Yep.
What to do, what not to do. What to watch out for.
I can get what I refer to, Sam, as financial whiplash while I'm watching the financial news because you got one guy who comes on and he says, I see nothing but problems. I think this market's going down 40%.
Doom and gloom, it's going to drop.
Yep. I hear other people say this is a bull market and we're just going to keep on going. January was good, and as goes January, as goes the rest of the year, and we're going to be just fine.
Everything's going to be hunky-dory. Don't worry about a thing.
Who do you listen to?
Yeah, right.
And then you're on the verge of retirement and you're saying, well, the market's going pretty good. Should I just let her roll? Or do I walk in and talk to Sam and say, protect what I've done because I don't want to lose it? How do you, is this a big concern to people who walk through the door?
I mean, I think sometimes people have, I guess we call it financial amnesia. Where we forget about things that have been so good. We kind of forget, hey, the other shoe can drop any time. Mm-hmm. Really it depends on where you are in your retirement journey. If you're 35 years old, hey, it's going to go up, it's going to go down. You actually, I don't want to say you want it to go down, but when things are going down, there's opportunities. You're not going to use the money for a long time. Mm-hmm. You don't want the market to go down the day after you retire and you intend on withdrawing money from your retirement savings. We all know that. Intellectually, at least we all know that. You should be buying low and selling high. You don't want to be doing the opposite. So I think it's important, again, where you are in your retirement journey to sort of figure out, hey, is accumulation and growth the most important thing in my life right now? Or is protection a little bit more important because I need to take income, or I need more income, and I need to withdraw money from my savings? So again, it depends on where you are in that journey.
I remember all of those documentaries back in 2008, and they talked to retirees, and people, use that phrase, my 401k became a 201k.
201k, yeah.
And that, that was not funny.
No, it wasn't.
It's not. That was funny at all.
When you talk to your advisor, and if they say, don't worry about it, it'll come back as it did in 2009 and 2010, they're absolutely 100% accurate. They're 100% true. You leave it alone, it'll come back. Mm-hmm. But what if you can't leave it alone? What if you need some of that money? That's really where I think people just need to understand there's something called sequence of returns that we try to educate our clients on, our podcast listeners, our YouTube watchers on. And that sequence of returns probably has no bearing if you're in the accumulation phase. But if you're nearing retirement or actually need to take money out, it can hurt. If it happens, it can hurt. It reminds me of a situation where we were referred to by some clients, and this happened some years ago. These people came into my office, Mike and Maureen. They were sitting in my waiting area, and when I went to greet them, I could literally feel the tension, Mm-hmm. So long story short, they came into my conference room, and I said, what do you want to talk about? And Maureen says, well, go ahead, Mike, you tell them. And you could tell
the sharp elbow.
You could tell where that was going. And Mike says, listen, I retired from a local company, and we are in the computer storage space. I was a salesperson. I made a good amount of money, and I went to my broker just before I retired. Hey, Joe, can I pull this off? I got $1 million. I need $40,000 a year. And Joe, the broker, who's become friends with them, said, hey, absolutely no problem. We average, 8 or 9%. For $40,000 out of $1 million is 4%. Yeah, you'll have no problem. I'd buy into that too. The problem was it wasn't Joe's, fault. It wasn't the client's fault. It was just they retired just at the wrong time. They retired just before the dot-com bubble. You probably remember that. It was 3 consecutive years of negative returns. So they went into retirement, $1 million, sounds pretty good. They pulled out $40,000. The problem was the market went down by about 10. So at the end of 1 year, they don't have 940 anymore, 960 anymore. They have like 850. Mm-hmm. They go to pull out another $40,000. The market goes down some 15%. Third year, same thing. They pull out 40,000. Market went down in the double digits again. By the time they came to see me, and that's why there was so much tension when they came to see me, they had about $500,000 and they needed to pull out $40,000. My answer was, after doing some analysis, yeah, you can do it, but it's only going to last you a few years. So your choices are, one, go back to work, or two, they were big golfers, get rid of that country club membership, which totaled about $30,000 a year. And neither of those were good choices. So understanding that markets will always go up. So that's when we look for opportunities. Markets at some point will contract and go down. So we need to protect your money if you need income. And understanding where you are and having a good balance and asset allocation with your money. Don't be too greedy. Don't always chase it. Don't be overly conservative and always think, the next shoe is going to drop tomorrow and put all your money in the bank or CDs, because then you'll be missing out and leaving money on the table. But having a good balance, I think, is really important.
Well, I've got an article in front of me here from USA Today, and it says the 7 deadly sins of investors in volatile markets. And one of them is saying this time it'll be different.
This time it'll be different.
16 years we are now past 2008. And as you use the term financial amnesia, sometimes, we went through 2020 with the COVID decline, and it went down 30% in about 6 weeks, but then it recovered so quickly. We think that is probably what's going to happen again, but it took 4 years to get back to even after 2008, and even longer on the dot-com bubble, and in 2000 took longer than that. So when you're in retirement and you're going to be there for 20 years, it takes 4 years to dig your way out of a hole. That's where you have those sleepless nights that we talk about.
Yeah, I mean, I think all kidding aside, if you make, let's say you find the right opportunity and you make 15% on your money versus your normal 8 or 7. Well, you know what? That extra money is pretty darn nice, right? I'll take it all day. But if somebody were to lose 20, 30, 40% of their money, 20, 30, 40% sounds like a lot. $1 million losing 40%, that's $400,000.
Yeah.
That's a lot of money. So how long is that going to take for you to recoup? It might take a year. It might take 5 years. I have no idea. It depends on where your money is. But if you need the money, even if you recoup that money, that ship is sinking, right? You're not keeping your head above water. It's really important to understand that. And 1 + 1, Randy, is what?
2.
2. If you lose 50%, next year you make 50%.
You'd think you'd be even.
You think, the average says 0. You think you'd be back, but that's not the case. If you get $1 million and you lose 50%, you're now at $500,000.
Right.
If you make 50% in year 2, well, 50% on $500,000 is $250. So at the end of that 1 year, even without taking out any withdrawals, you only have $750,000. You're not back to where you were 2 years ago. So my point is, if you go down, you need to make a lot more to get back to even.
This goes right back to the original program that Sam started years ago, Just Don't Lose the Money. Walking in the door and saying, let's stop this before it starts. Because right now, all we hear about in the markets is a possible recession. And if that happens to you in your retirement, Sam, this is not a good place to start.
Yeah. We are professionals in the retirement and wealth management business. My 2 partners and myself, I like to think we make a very good team. We're always looking for opportunities. We're always looking for ways where our clients can have more, make more. But we never forget about how important it is to protect your life's work, how important it is to protect the downside, because eventually, at some point, it's going to come. And if you're in retirement, protection is really important to address. Growth, protection, and income. All equally important. Depends on where you are in life. What's more important, right? So making sure that we protect what you have, very important.
If you want to sit down with Sam and the team at Rubino & Lang Wealth Partners, give us a look on our website. You can find all of that in the show notes. We've got lots of links there for you. You can click on that, set up a 15-minute introductory call, talk through your concerns, and find out what the team is like. As Sam says, kick the tires and see if we're a good fit for each other. We would love to be able to help you with your retirement. That's all we have for you today. We'll join you again next week here on the 365 Retirement Podcast. Thanks so much.